All right, what a difference one day makes. So yesterday's video I was talking about Wish and how you could potentially have a 70% upside on buying call options on Wish. Well, lo and behold, today the stock jumped quite a bit, almost 20%. It's right at 18.42%. Looks like it got swept up in some more, maybe meme stock trading or whatever the case was. And if we jump and look at the volatility, you can see here that, like I mentioned before, it was spiking early June, kind of on a path of trailing off, and it just spiked again this past day. So what does that mean for the potential for profit for buying call options for Wish? Well, going back to this, we can see analysts have a price target right at around $18.60 per share. Yesterday's has had about a 63% upside. Now, obviously, with the stock being up, down to 37.78% upside. And let's take a look at the option profit calculator to see how that changed. So, getting the price currently at 13.5. Yesterday, I believe it selected the December 2022 call option at a $5 strike price. And take a look at this. So, we're about a $2 higher than yesterday. I believe yesterday was right about $7.80 or so, mid price to purchase a $5 strike price. Now being at $9.85, obviously it's much higher, it'd be a much more expensive call option to buy. So with that in mind, let's take a look. If we were to hit the right around the 1860 range as far as the price target, looks like if the stock were to rise right about 39%, we're on expiration looking at about a 39.6% gain. It's not bad, obviously, but for that close of a difference, sort of smaller difference between the stock rising and the option contract price rising, it may be best, at least right now, at least in my opinion, I'd buy, if you really were bullish on Wish, I personally would buy common stock shares. I would wait for some of this volatility to drop a little bit, maybe at least back to where it was yesterday or a couple of days ago. And once that happens, the option prices should be a little bit more reasonable, cheaper to acquire, and purchase your position again, or if you did already and cashed out, or enter it for the first time and be able to ride the wave until it hits near its price target. You could also try to get something a little bit closer in the money, but like I showed yesterday, it's not as attractive as getting something deeper in the money. So let's take a look at something at $10. So if we were to get the mid price at $7.80, which is actually where the $5 strike price was yesterday, and calculate here, you can see here that the growth upside potential is not as nice as something deeper in the money. So 44, actually wrong line here. So 38.9% rise. You're looking at about 12.2% upside on an option contract. So personally, if it were me, I would, if I really was bullish on the stock, I would own common shares and just wait until some of the heat, or whatever you want to call it, dies down a little bit on this stock before purchasing call options, if that's what you want to do. But yeah, there you have it. We'll see what happens tomorrow. But thanks for watching the video. Please like and subscribe the video.